Welcome to ILT Academy. Today we are going to cover preparation of final accounts of sole proprietor. In this, what you are going to learn means how to prepare trading account, P&L account and balance sheet. And first we are going to do what? Non-manufacturing entities. So how to prepare final accounts of what? Non-manufacturing entities. Now after this chapter, and in this chapter we are going to learn how to draw the final accounts of non-manufacturing entities, and you are going to understand the relationship between the profit and loss account and balance sheet. You are going to understand the trading account items. This will help you to learn which of the transactions and events should be shown in the trading account, and similarly you are going to understand the items shown in the profit and loss account. By that you will learn the techniques of preparing profit and loss account, deriving the profit and loss balance. Now we are even going to understand how to adjust the outstanding and prepaid expenses, accrued incomes and income received in advances. Like expenses, you are going to learn outstanding expense, how to treat it, and prepaid expense, how to treat that. Similarly, accrued income and income received in advance, how to adjust these all things you are going to learn. Clear? Now we are going to even understand the items to be shown in the balance sheet, and also learn the classification of the assets and liabilities and the order by which they are presented in the balance sheet. Okay, these are the major important things what we are going to understand after learning this chapter. Now when we talk about non-manufacturing business entities, what do you mean by this is, what are manufacturing business entities? They are manufacturing any product means that is manufacturing business entities. Non-manufacturing means what? Other than manufacturing. In all these cases, final accounts are to be prepared on the basis of trading account, P&L account and balance sheet. These are the three items which you are going to do. So let us understand briefly. Now what are non-manufacturing entities? These are the trading entities, okay, which are engaged in the purchase and sale of goods for the profit without changing the form underlying the use of such goods. In other words, non-manufacturing entities do not process the goods purchased, rather sell them in the original form. Meanwhile, the entity indulges in some liabilities, makes some assets and also incur some expenses like salary, stationery expenses, advertisement, rent, etc. to run the business. At the end of the accounting year, the entity must be interested in knowing the results of the business. To ascertain the final outcome of the business, that is the income and the financial position, they prepare the financial statements at the end of accounting year. Now let us understand what is a non-manufacturing business. Now what is a non-manufacturing business means, in the case of manufacturing entity, the entity is going to manufacture the product. Okay, entity going to manufacture the basic product, that is called as manufacturing entity. Non-manufacturing entity, there is no manufacturing process which will be going undergone. Directly the product which is in the form of final good will be bought and will be sold, or else an intermediary good will be bought and will be sold. Other than processing, here rather than processing, they will be just involved in what? Sale activities. They will be basically doing what? Trading activities, where they will be purchasing the raw material and sell the raw material, or else purchase the intermediary and sell the intermediary. No work in progress is going to be done, or any further process is done for the raw material in the case of non-manufacturing entities. Clear? Now financial statement consists of two things. One is income statement and another one is position statement. Now income statement includes trading account and P&L account. Position statement includes what? Balance sheet. Okay, financial statements consist of two things. One is income statement and another one is what? Position statement. Income statement, to understand our income, that can be further classified into trading account and profit and loss account. Position statement includes a balance sheet. Trading account, P&L account. Trading account is done to ascertain gross profit or gross loss. Profit and loss account is done to ascertain net profit or net loss. Balance sheet to understand the position of assets and liabilities. This is the base. Here. Now financial statements are the systematically organized summary of all the ledger accounts and presented in such a manner that it gives the detailed information about the financial position and the performance of the entity. As seen above, though categorization of the financial statements into income and position statement, the profit or loss is measured at two levels. One is gross profit or loss, and another one is net profit or loss. Got it? Here, समझ में आया? Now, what you ascertain by preparing profit and loss account of the enterprise? Profit and loss, the profit or loss of the enterprise is obtained by what? Preparation of income statement, that is trading and P&L account. Then what about balance sheet? By preparing balance sheet, you will understand what? Financial position. You are going to understand the financial position. The financial position of the business enterprise is assessed by measuring the assets and liabilities and the capital of the enterprise. Same is to be communicated to the users of the financial statement. The financial position of an enterprise can be known through the preparation of what? Position statement, that is nothing but a balance sheet. Clear? Now if you do the comparison between the income statement and position statement, income statement is done to ascertain what? Profit or loss, whereas position statement is done to ascertain the position of assets and liabilities. It exhibits the assets and liabilities of the business at the close of financial year. Okay, income statement consists of what? Trading account and P&L account, whereas position statement consists of what? Balance sheet. Balance sheet, it is categorized as what? This side assets and this side liabilities. Here, income statement discloses the net profit or net loss of the business, whereas position statement discloses the financial position of the assets and liabilities on the particular date. Now, preparation of final accounts. The principal function of the final accounts, that is trading account, P&L account at the balance sheet, is to exhibit truly and fairly the performance and the financial position of the business to which they relate. In order that these may be properly drawn up, it is essential that a proper record of transaction entered by the business during a particular accounting period should be maintained. The basic principles in regard to the accumulation of the accounting period data are: a distinction should be made between the capital and revenue, receipts and payments. Income and expenses relating to the period of account should be separated from those another period. Now let us understand. There are two types of expenditure. One is revenue expenditure and another one is capital expenditure. Now whenever you do revenue expenditure, it will be charged to P&L account. Whenever you do capital expenditure, it will be shown as what? Balance sheet asset item. Okay. Now purchasing a car, it is a capital expenditure, but उसमें fuel डालना वो क्या हो जाता? Revenue expenditure. That is what? day-to-day activity. These are recurring expenses and these are what? Non-recurring expenses. Capital expenses are going to become form as what? An asset. Revenue expenditure will go directly into the profit and loss account. Different items of the income and expenditure should be accumulated under the significant heads of income to disclose the sources of capital between the nature of liabilities and outstanding for payment. This we can do later. Okay, now we'll start with few examples. Now let us understand trading account. The basic of trading account, how it looks like. Suppose this is a trading account. This you are going to record two opening stock, two purchases, less purchase returns, here by sales minus sales returns by closing stock, right? And there are some direct expenses which are going to come in the trading account. Then finally you will be getting what? Gross profit. Okay, this is how the trading account looks like. Clear? This is the basic pro forma: sales minus sales returns, closing stock, trade, opening stock, purchases, direct expenses by closing stock. Now this is nothing but now by adding opening stock, add purchases minus purchase returns, add direct expenses minus closing stock. This will give you this box minus this box will give you COGS. Now you can do what? Sales minus sales returns minus COGS also will give you what? Gross profit, or else this box. Orange box minus orange box. Big one minus small one will give you what? COGS. COGS has two formulas. One is what? Opening stock plus purchases plus direct expenses minus closing stock. Or else sales minus sales returns minus gross profit. That is also going to give you what? COGS. Or else this formula. Sales minus COGS will give you what? GP. This is one main thing. Okay. When you add opening stock, add purchases, add direct expenses minus cost of goods sold, you'll be getting closing stock. Or else you can add what? Opening stock, add purchases, add direct expenses minus closing stock will give you COGS. Anything is fine. This is the equation of COGS. Got it? So you can write like this: COGS is equal to opening stock, add purchases, add direct expenses minus closing stock, or else sales minus GP. This will give you COGS. Any doubts? Clear? Got it? Suppose in the first year the net purchases, that is after deducting the returns, is total 1 lakh and 15,000 worth goods at cost were not sent at the end of the year. The cost of the goods sold, this is fine, not required. Let it be. This is the pro forma for trading account. Please note down. Now coming to direct expenses, few examples for direct expenses are freight and carriage, customs and insurance, and wages, gas, water and fuel, factory expenses, royalty on production. These all are expenses which are used in now. So these are the direct expenses. These are all expenses which are incurred in the factory. So freight and carriage, customs and insurance, wages, gas, water and fuel, factory expenses, royalty on production. Okay, from this gross profit is the final answer. So gross profit रह सकता है, वरना तो gross loss भी रह सकता है. Here it is not. So GP or gross loss. In the case of gross loss, it will be here. Gross profit, it will be over here. Either one is possible. Okay, this is the pro forma of trading. Now these are the points to remember. These are nothing but like opening inventory is recorded on what side? Debit side. This is not debt side, it is debit side. And sales and closing inventory are entered on the credit side. If there are any direct expenses, then they should also be written on the debit side of the trading account. If there are any direct expenses, those are also recorded on the debit side of the trading account. If the balances of the credit side is more than the difference is written on the debit side, that is nothing but gross profit. After balancing no debit and credit side, if credit side is more and debit side is less, that is a profit situation and you will be having what? Gross profit. If the similar way, if debit side is more and credit side is less in the trading account, so the credit side you are going to get the balance, that is what? Gross loss, that we will be doing. However, now trading account items are like what? Trading firm, like a wholesaler, what does he do in his main business? Consist of what? Buying and selling the same goods. In addition to the amount of opening inventory, trading account will also debited with all expenses incurred in bringing the goods to go down of the firm, present condition and location, and making them ready for sale. In trading account, you are going to record all expenses which are going to incur a product to make it ready for sale. All expenses which we are going to incur to make the product ready for sale, those are incurred in trading account. Those are to be posted in trading account. For example, right, paid on purchases, cartage, octroi, etc. will be debited to trading account. The rule is that this account will be debited with all expenses incurred in bringing the goods to their present location and condition and making them ready for sale. We shall now consider the individual items. Like opening inventory is what? What is the journal entry? Trading account debit to opening stock. How this entry is possible? Now this is trading account and this is to opening stock. The journal entry is trading account debit to opening stock. Perfect. Purchases or purchase returns, again we are going to write on the debit side, so it is basically the same thing. Carriage freight. Now from this illustration number 1, we are going to prepare what? Trial balance for the financial year 31st March 2022. Mr. Deepshika shows the following details like purchases and sales, debtors and creditors, opening stock, closing stock, other expenses and income, fixed assets, long-term liabilities and capital. Additional information: creditors balance as on 1st April 2021 is how much? 3 lakhs. Creditors balance is how much? 3 lakhs on 1st April 2021. You are required to calculate the cost of goods sold and amount paid to the creditors during the year. Can we do this? Okay, kara. Now whatever are given, no, let us post that in trading account. Now if you see opening stock is how much, ma? 2 lakhs. Closing stock is 3 lakhs. Purchases and sales are how much? Purchase returns, do we have anything? Purchases are 10 lakhs. Sales are 12 lakhs. And we are having debtors, creditors, that is like liability and asset. This is asset and this is going to be liability. Opening stock is done, closing stock done, other expenses and incomes. Other expenses and other incomes are going to form in P&L account, fixed assets and long-term liabilities. Capital, so and so. Additional information: creditors balance as on 31st March 2021, that is creditors. First we need to find COGS. What is COGS? So I told you two ways. One is adding opening stock, add purchases minus sales. Or what? Opening stock, add purchases minus closing stock. तो इसमें से ये निकाल दो. That should be your COGS. Opening stock, add purchases minus closing stock. ये हो जाता 2 लाख, ये हो जाता 10 लाख, ये हो जाता 3 लाख, which is 9 lakhs. Sorry, this is trial balance, ma. So whenever trial balance is given, no, the closing stock is already adjusted. This closing stock will be going to balance sheet. This is adjusted closing stock. So closing stock will not be recorded in trading account. So how much you will be having? 12 lakhs as your COGS. This is adjusted closing stock. This closing stock will go to balance sheet directly whenever this is trial balance. Sorry. Clear? Got it? Next, additional information: creditors. Creditors balance is how much? 3 lakhs. So let us understand this situation. So for this purpose, we will be preparing creditors account. So creditor is a liability. So liabilities will be always having what? Opening credit balance. By balance brought down and to balance carried down. And what is the opening balance? Is given in the question. Creditors opening balance is 3 lakhs and creditors closing balance is 4 lakhs. Now Seema, this is very important question. Now let us understand this. Purchases are how much? 10 lakhs. So purchases, when we do know, the entry is what? Purchases account debit to creditors. Since we don't know whether it is a cash purchase or credit purchase, we'll assume that this will be totally credit purchase. So by purchases, the problem is how much is the purchases value. Generally the purchases value is 10 lakhs only as given in the question, but here closing stock is already adjusted. So closing stock also to be added to the purchases. 10 lakh plus 3 lakhs, how much is the purchases value? 13 lakhs. Whenever this is called as adjusted purchase. Adjusted purchases are given as 10 lakhs. So correct purchases will be 13 lakhs. Now 13 plus 3 is how much? 16 lakhs. Now this is 16 lakh. 16 minus 4 will be what? The balancing figure. That is what? To bank account. This is nothing but 12 lakhs. ये क्या है? Not COGS. This is credit payment. Payment to creditors. Bank account आया ना? Creditors को payment करे तो. This is called as payment to creditors. Now let me explain you how the creditors account works. Now see, already creditors were having the balance of how much? 3 lakhs. Now additionally you purchased 13 lakhs. So total balance of creditors had become how much? 13 plus 3, which is 16 lakhs. 16 lakhs may the payment of 12 lakhs was done. So the balancing figure is how much? 4 lakhs. Here, this is the balancing figure. Got it now? Any doubts? Dharma, any doubts? This is how COGS calculation is done. This is payment to creditors. So you are going to get 12 lakhs. That's it. Got it? Now purchases made during the year. Purchases as per trial balance and closing stock already adjusted. If you add this both now, that will be purchases made during the year. Any doubts? Clear? Got it? Students may note that in the closing stock it is mentioned in the trial balance. Then it means opening stock and purchases appearing in the trial balance include the value of unsold stock. So we prepare our financial statements using the matching concept. Since unsold stock should not form as part of cost and therefore it is deducted from COGS. We will have to use this formula. COGS is equal to opening stock plus purchases minus closing stock minus purchases return. This is the basic formula what I have already taught. Now refer to this information and prepare trading account of Messrs ABC Traders for the year ended 31st March 2022 and pass necessary closing entries in the journal proper of Messrs ABC Traders. I'll explain. Now opening inventory, where it will be going? Trading account. Opening inventory debit side 1 lakh. Next purchases 6,72,000 and there is return inward and return outward. Now what do you mean by return inward and what do you mean by return outward? Return inward is nothing but sales returns. Return outward is nothing but what? Purchase returns. Opening inventory is 1 lakh. Purchases is 6,72,000. Garage inwards is 30,000. Wages are 50,000 and sales are 11 lakhs and return inwards, return outwards are given, which we need to deduct from purchases and sales and closing inventory respectively. Now this closing inventory will be included or not? We are going to include it. Okay, why? Because this is not the above question is not a trial balance. That is the reason. So opening inventory 1 lakh, add purchases minus purchase returns, carriage inwards, wages, sales minus sales returns, closing inventory, like this. Okay, just to post in trading account, you'll be able to manage to do it. You'll be having a trading profit of how much? 4,20,000. Write it. But now, how to record this in journal proper? These are the closing entries. Let us understand return outwards. Return outwards account debit to purchases account. This is the basic entry for what? Purchase returns. And next is sales return. Sales account debit to sales returns, being transferred to the returns to the sales account, being transferred to the returns to the purchases account. Sales to trading account. Trading account debit to opening inventory, purchases, wages, carriage inwards, all whatever you have written in debit side and credit side. Closing stock to trading account. Last you will be having the scenario of what? Either gross profit or gross loss. Trading account debit to GP, gross profit, which is 4,20,000. Now GB will be transferred to which account? Profit and loss account. Okay, here gross profit account debit to profit and loss account 4,20,000, like this. Now this is profit and loss account. What we need to understand, all indirect expenses are going to be covered in profit and loss account, and indirect expense which is other from our operations, those are going to come in P&L account. Now see, there might be two situations. After preparing trading account, you might be arriving at gross profit or gross loss. Gross profit will be brought down on the credit side, and gross profit will be brought down on gross loss will be brought down on the debit side. Now coming to the indirect expenses, now let us categorize them. We can categorize first expense as management expenses. Now management can incur expenses in the form of salaries. They can even pay office rent, rates, taxes, printing and stationery, telephone charges, postage, insurance, audit fees, legal charges, and electricity charges. Now we are having maintenance expenses. Those are like repairs and renewals what we incur, and depreciation, which is non-cash expense. Depreciation on office equipment, furniture, buildings, so and so. Now we are having selling and distribution expenses. Selling and distribution, again same like what? Salaries, advertisement, go down rent, carriage outwards, bad debts, so and so. Clear? Got it? Any doubts? And we are having financial expenses like bank charges, interest on loans, discount on bills, discount allowed to customers, and if there are any abnormal losses, loss of stock by fire, or loss on sale of machinery, or loss on sale of investment, these are going to be covered as what? Abnormal losses. These are the items which are going to appear in P&L account. And coming to opposite side, that is credit side, on that side you are going to record other incomes. Like other income, sometimes you might be receiving discount received, commission received, and non-trading incomes like bank interest, rent on property let out, and dividend from investment on shares. Clear? Abnormal gains, again same, opposite to abnormal losses. Suppose on sale of machinery, if you receive anything, that is profit, that but that is called as what? Gain. Clear? Abnormal gain, profit on sale of machinery or profit on sale of investments, that is not your regular activity. So finally net loss, if net profit is not the situation. These are the now let us understand. Now illustration number 3, if you see now, the gross profit of the business is 4,20,000, and the sales is given, discount credit is given as 18,000, and discount debit is given as 19,000, bad debts as 17,000, depreciation 65,000, legal charges so and so, consultancy fees so and so, audit fees, electricity charges, telephone, postage, telegrams, stationery, and paid on loans. Now in this question it is asked to prepare profit and loss account. So how to do the profit and loss account? I am going to do over here only. Profit and loss account, particulars rupees, particulars rupees, this is debit side and this is credit side. Now first what is given? Gross profit, what down? It is how much? 4,20,000. And what is the expense? To salaries, that is 1,10,000. Now discount credited is 18,000. By discount, credit will be coming on the credit, that is 18,000. Discount debit, that is 19,000. And there are bad debts of how much? 17,000. depreciation 65,000. Legal charges 25,000. Next we are having consultancy fees. So consultancy fees 32,000, and next audit fees 1,000 rupees. Audit fees 1,000 and electricity charges 17,000. And telephone postage telegram 12,000, and stationery 27,000. Stationery 7,000. To interest, is 70,000. With this we have recorded all the expenses and incomes. Now if you see the debit side and credit side, if you do the total, this side you are going to get this side you are going to get 4,20,000 plus 18,000, 4,38,000. And let's check the total of debit side, which is 1,10,000 plus 1,10,000 plus 19,000 plus 17,000 plus 65,000 plus 25,000 plus 32,000 plus 1,000 plus 17,000 plus 12,000 plus 27,000 plus 70,000. What is the total now? 43,000 is profit. Here 4,38,000. 4,38,000. So debit side is more and credit side is less. So net profit, we call it as what? Net profit 43,000. Any doubts? Clear? How to record the items in P&L account? You got it? Now this is general proper in the books of ABC traders. General proper में क्या entries लगाने वाले हम बोले? Now P&L account debit to all expenses whatever you have incurred. Salaries, legal charges, consultancy fees, audit fees, electricity charges, telephone, stationery, depreciation, discount allowed, bad debts and interest. These all are going to amount to 3,95,000, which are debit side entries. Next, gross profit to profit and loss account, which is bought down from trading account. Okay, the gross profit account debit to P&L account. Now from that, profit and loss account debit to net profit, which is 43,000. Now net profit will be transferred to capital account, 43,000. Got it? Clear, ma? Adjustments are there. We will be doing directly from the sum one. Only two. Now the question is prepare closing entries for the above items in the and prepare trading and P&L account. So let us leave some space for closing entries and we will record first a trading account and P&L account. Later it will be very easy to record all the closing entries. Okay, on OneNote we can do. Done with this one? of C. Vancho. The books of we're going to prepare trading account and profit and loss account. Particulars rupees, particulars rupees. Now capital account is what? The liability. Inventory as on 1st April 2021. Now these books are going to be closed on 31st March 2022. So 1st April 2021 is nothing but opening stock, opening inventory. Opening inventory is 2 lakhs. Cash in hand, this is asset. Stationary asset. Purchases on 18 lakh 20,000. Do we have purchase returns? Meanwhile, you write down purchases 18 lakh 20,000. Next, wages account 10 lakhs. Wages 10 lakhs. Salaries 10 lakhs. So salaries is a profit and loss item. Salaries 10 lakhs. Next, discount allowed to be 50,000 and discount received is 30,000. So discount allowed to be 30,000 and discount allowed to be 50,000 by discount received 30,000. Sundry office expenses 6 lakhs. Office expenses are 6 lakhs. Office expenses 6 lakhs. Next, sales account we are having 50 lakhs. Sum owing by customer, that is trade receivables 8,50,000. This is asset. Trade payables is a liability. So till here we did. Now there is one adjustment, I think, that is also closing stock. Closing stock is 2,70,000. So by closing stock 2,70,000. Now prepare closing entries we will be doing, however, so we can do the account type. 3 lakhs plus 2,70,000 minus 20 lakhs minus 18 lakh 3,000 minus 10 lakhs. This 4,50,000 is the gross profit. To gross profit. Just balance it after adding this both minus this both. So 50 plus 27, 2,70,000 will be 2,70,000, and from that, from this, if you deduct this now, you are going to get a gross profit of how much? 4,50,000. This gross profit is going to jump up here. So by GP, brought down 4,50,000. minus minus 7 minus 10. This is 22 lakh 50,000. 22 lakh 50,000. Now same way we are going to total this. 2 lakh 50,000 plus 30,000, which is 22 lakh 80,000. From this, you need to remove this. Then you are going to get net profit. This 10 lakh minus 10 lakh minus 50,000 minus 6 lakhs. This is 6 lakhs 30,000. The balance. Got it, ma? Lakhs 30,000. Now next one is balance sheet. Now balance sheet we can do the classification of assets as what? One is non-current assets and another one is basic things as current assets. Here now what are non-current assets? Non-current assets include tangible assets and intangible assets. Clear? So land and building, plant and machinery, furniture. These all are what? Non-current assets. Now coming to current assets, stock, debtors, bills receivable, other investment, government securities, cash in hand, cash in bank. These all are what? Current assets. Why? Because these are having high liquidity. Now similarly, current liabilities, non-current liabilities and equity. Equity is nothing but capital. Okay? Reserves and surplus. This is going to form as what? Equity. Owner's equity. Outstanding expenses, loans, trade creditors and bills payable. Now trade creditors and bills payable and outstanding expense loan if it is long term you can treat it as non-current liability. This outstanding expense, trade creditor and bills payable are current liabilities. Okay, got it? What is a current liability? What is non-current liability? Non-current liability is what? Long term purpose. Current liability is short term and owner's equity is capital. Now I will tell you about allure. What do you mean by allure? Assets, liabilities. A for assets, L for liabilities, O for owner's equity, R for revenue, E for expenses. By categorizing them either as an asset or a liability or equity or a revenue or an expense, based on this you are going to post the item in what? Relevant trading account, P&L account or balance sheet. Clear? Now you see now these are the tangible fixed assets like land and building, plant and machinery, furniture, fixtures, vehicles. These are called as what? Tangible assets. Intangible, goodwill, patent, trademark, copyright, service mark, trade secret. These all are going to become what? Intangible assets. Now investments can be of two types. One is long-term investment or else what? Short-term investments. Current assets like inventory and trade, trade receivables, short-term investments, prepayments, prepaid expenses. These are nothing but prepayments. Similarly, capital account. So whatever you are getting net profit or net loss, that is going to be added or deducted from capital. Okay, it is going to increase or decrease the capital. Afterwards you are going to subtract what? Drawings, if any. Okay, if you don't want to inject the profits into the business, you are going to withdraw that money. Okay, that is called as drawings. Now long term loans, term loans and other loans which are taken for long term purpose, this is non current liability. Now coming to short term loans, this is a current liability which consists of cash credit, overdraft, other loans. Okay, this is the basic nature of current liability. Provision for bad debt, so many things are there. Provision for taxation, fine. Now this is the trial balance. From this we are being asked to prepare the balance sheet. So let us understand. This is illustration number 6. Now from this illustration we are going to prepare balance sheet. Now write down first one, capital account 7 lakhs. Capital 7 lakhs. Let us write this inside only. Need to check whether there are profits or loss. Land and building 3 lakhs. 1 second. Land and building is 3 lakhs. Now 14% term loan having a credit balance of 4 lakhs. Next we are having loan from Messrs D and Company 4,60,000. This 4,60,000. Next, trade receivables 4,20,000. Next, cash in hand 20,000. Inventories in trade 6 lakhs. Furniture 2 lakhs. Trade payables 40,000. Advance to suppliers 1 lakh. Advances to advances to suppliers 1 lakh. Next, net profit is 1 lakh. Capital is 7 lakhs. Add net profit 1 lakh. Next we are having minus drawing 60,000. 7 plus 1 8. 8 minus 60 7,40,000. Now if you do the balance sheet total, it is going to appear as 3 lakh plus 2 lakh plus 4,20,000 plus lakhs 1 lakh plus 20,000 16 lakh 40,000 7 lakh 40 12 6 12 12 16 lakh 40,000. That's it. Both on asset side and liability side, you will be having 16,40,000, the total balance sheet value. Got it now? Just note down this. Now, Seema, the next question is the balance sheet of Thapar as on 1st April 2021 was as follows: trade payable so and so, expense payable, capital, plant and machinery, furniture and fixtures, cash at bank, inventory so and so. During the year 2021 to 22, his profit and loss account revealed a net profit of 18,30,000, and this was after allowing the following. Profit was revealed to be 18,30,000. In that, they have already taken rent received from the property let out as 3 lakh, which is other income. Already they have done the P&L account. Okay, clear? And plant and machinery 10%, furniture and fixtures 5%, a provision for doubtful debts 5%, and trade receivables at 31st March 2022. But while preparing the profit and loss account, he had forgotten to provide what? Outstanding expenses totaling 1,80,000 and prepaid expenses of 20,000. We need to correct this profit and loss account first. Already there was a balance of how much? Net profit of 18,30,000. Okay, after providing these all adjustments. Now you missed to do what? Outstanding expenses of 1,80,000. So two outstanding expenses 1,80,000, and there was a prepaid insurance of how much? 20. By prepaid insurance 20,000. Now 1830 plus 20 minus 1,80,000. This 16,70,000 is the correct net profit which is to be taken to the balance sheet. 16,70,000. That's it. Now illustration number 7 will do. Now see, the question is to prepare a balance sheet. Now rent received from the property let out is 3 lakhs. So rent received from the property will go into what? Cash and bank account. So cash at bank. Already we are having how much? Let us write this. That is already 6 lakhs. Add 3 lakhs. 50 and 3 lakhs. We'll wait. So this will be 9,50,000. I think so. There are some more in cash and bank. Next one is what? Depreciation on plant and machinery at the rate of 10%. Plant and machinery 3 lakhs minus depreciation is 30,000, which will be 2,70,000. Any doubts? Furniture and fixtures 5%. There is a balance of plant and machinery 30 lakhs. Sorry, it will be 3 lakhs and 27 lakhs. Furniture and fixtures is 3 lakhs, and the depreciation rate is 5%, which is 10,000. So it will be 2,85,000. Next, a provision for doubtful debts at the rate of 5% of the trade receivables as on 31st March 20. ट्रेड रिसीवेबल्स कितना है 14 lakhs. A provision for doubtful debts at the rate of 5%. 70,000. Put in there. But while preparing the P&L account, he had forgotten we have done this. Outstanding expenses of 1,80,000. Expenses of 1,80,000. Let us finish the adjustments. And prepaid insurance to the extent of 20,000. His current assets and liabilities were as follows. Okay, cash and bank balance is already given 10,35,000. So no need to do this. Let us understand. Current assets and liabilities were inventories 14,50,000. Inventories 14,50,000. Next, trade receivables 20 lakhs. Trade receivables 20 lakhs. So this provision is assets as of 31st March 2020. So no need to do this trade receivables. अभी not required. Trade receivables है ना already. Closing balance दे दिया. Asset bank दे दिया. Trade payables 11,40,000. Huh? Answer solution. Let me check once. As at 31st March 2020. Okay. Provision निकालना है. 3 lakhs minus provision for doubtful debts 1 lakh, which is 19 lakhs. ये हो गया. Cash at bank is done. Cash at bank 10,35,000. Trade receivables done. Land and machinery done. Furniture and fixtures done. Inventories prepaid insurance audit. Now let us understand this. Capital is how much? 50 lakhs. And net profit, which was how much? 15 lakh 70,000 minus drawings. Drawings are given as how much? 6 lakhs. He withdraw 6 lakhs for domestic use. 50 lakhs add 15 lakhs on 60 70,000. And next coming to expense payable is 1,50,000. 7,40,000. This is the closing expense already done. Your balance sheet should tally. It's 73,90,000. Done. This is the sum. You can note down. Balance sheet as at 31st March 2022. Mahindra and Sons has liabilities of 5,60,000, capital is 20 lakhs, cash in hand 43,000, cash bank 26, 2,67,500, trade receivables, closing inventory, machinery and equipment, so and so is given. From the above given balance sheet, prepare the relevant opening entry. The question is opening entry. Now opening entry is very easy. Assets account debit to liabilities. The balancing figure will be capital. But in this question it is already given, so not an issue. Okay, this is how you need to prepare all the assets account debit to liabilities to capital account. This is called as opening entry. Got it, ma? Now this is illustration number 9. You are required to drop the final accounts. This is the question. So from this following details you need to prepare final accounts. So let us do that. Now let us do this question. So first what is given? Adjustment, we'll check it. Closing inventory is valued at 1 lakh. So closing inventory adjustment should be done. Closing inventory will be recorded in the balance sheet as 1 lakh and trading account as by closing inventory as 1 lakh. This is the adjustment. Okay, adjustment is done. Now let us go one by one. Capital is a liability. Capital is 8,70,000. Write down in inner column. Purchases and sales. Do we have any returns? Yes. So purchases are directly linked with purchase returns. So to purchases minus purchase returns. How much is the purchases value? It's not 5,000. Minus purchase returns value is how much? 30,000. It will be 5,75,000. Now similar way, sales is 12,10,000. Minus sales returns, which are to be 40,000. 7,70,000. Got it? Sales minus sales returns. Opening inventory is 72,000. Trade receivables and trade payables. Trade receivables are 90,000. Trade payables are 1,70,000. 14% bank loan of 2 lakhs. % bank loan is 2 lakhs. Overdrafts 1,12,000. Next, salaries 2,70,000. Next, advertisement 1,10,000. Two other expenses 60,000. Returns done. Furniture 4,50,000. Being 8,90,000. Cash line 2,000. Input CGST 9,000. Input SGST 9,000 and output IGST. Now what we need to do is net tax payable is SEMA. Net tax payable is equal to output minus input. Now output is IGST. How much is payable is output is 15,000 and we can use input of 9,000 first. So still liability of 6,000 exists. Again we can use input CGST we have used, SGST of 6,000 can be used. So this liability will become 0 and still you are having SGST balance of 3,000. So this is asset for us. So input SGST 3,000. With this we have finished writing everything. Closing inventory was valued at 1 lakh. Done. Now first we need to calculate the gross profit and we'll check each and every item. Gross profit is how much, ma? If you add this total, it's going to become 12,70,000. 12,70,000 minus 22. Yes, 5,75,000 will give you 6,23,000. Gross profit. Perfect. I've got that. 6,23,000. This GP will be coming over here. My gross profit got down. 6,23,000. Now total, I think so net profit situation only. So 6,23,000 minus 2,70,000 minus 1,10,000 minus 60,000. 183,000. Nothing but net profit. This net profit will be added to what? Capital balance. We don't have any drawings, so this will be 10,53,000, and if you total it, it should match. And it is 10,53,000. Add 2 lakhs. Add 7,20,000. Add 1,70,000. 25 lakh for 10,53,000 plus 2 lakhs plus 1,12,000
Plus 170,000. Just 15,35,000. Yes, correct. Said also it should be automatically 15,35,000. Go check it. 8 lakh plus 90,000 2 1 3,000. 15,35,000. That's it. Got it.
Denmark, understand? Just note down. Now let us focus on the next illustration, illustration number 10. So Mr. Mohan gives you the following trial balance and some of other information like capital balance, sales, purchases, opening inventory, freight, inward, salaries, admin expenses. This is a basic question and few details of GST purpose it is given, not an issue. Okay. Now closing inventory was 1,80,000. And there is depreciation on furniture at the rate of 10% per annum. You are required to prepare the trading P&L account for the year ended 31st March 2022 and balance sheet of Mr. Mohan as on the date. So similarly, we need to prepare a trading account, P&L account, and a balance sheet. Fastly draw up the pro forma. My pro formas are done. Now let us first do the adjustments. Closing inventory was 1,80,000. So we'll be reporting the closing inventory on 1,80,000 and here by closing inventory 1,80,000. Any doubts? Trading account credit side and balance sheet asset. Closing inventory is done. Depreciation on furniture is at the rate of 10%. So furniture is how much? Furniture is 3,50,000. So minus depreciation. Just furniture at the rate of 10%. 35,000, which is 3,15,000 and 2 35,000. Any doubts? My furniture is done.
Closing inventory is done, furniture is done. So we'll record capital. First capital is how much? 6,50,000 in the inner column. Next sales 9,70,000. Sales 9,70,000. And are there any returns? You see it is 2,10,000 and 1,90,000. So sales returns are 2,10,000. So 970,000 minus 2,10,000 will give you 7,60,000. Next purchases 4,30,000. 4,30,000 minus what? Purchase returns, which are 20,000 and 12,000. 9,50,000. This is 10,000. Four lakh 18,000. Perfect. Next sales are done. Purchase opening inventory is 1,10,000. So opening inventory 1,10,000. Next freight inverses 40,000. So freight will come in which account? My trading account or P&L account? Freight inverts are 40,000. After this we are having salaries 2,10,000. Salaries 2,10,000. After other administration expenses 1,50,000. Admin expenses 1,50,000. Furniture 3,50,000 done. Trade receivables 2,10,000. Trade payables 1,90,000. Trade receivable, trade payables done. Returns done. Discount. Two types of discounts are there. One is discount allowed. Other one is discount received. Discount received to be 9,000 and discount allowed to be 19,000. Next we are having bad debts. Bad debts amounted to 5,000. Next investments in government securities 1 lakh. Cash in hand, cash at bank 189,000. Now we are left with. Now let us understand this one. So tax payable calculation: GST, GST, IGST. Output to be paid is how much? 8,000, 8,000, 6,000. Input available in CGST is 10,000. So total 10,000 is not required. Only 8,000 will be utilized for CGST. So it will become 0. And remaining 2,000 you can utilize for IGST. So 4,000 is the liability. Now input available in SGST. Input SGST available is how much? Same 8,000. Again 8,000. Sorry. Input available is 10,000. So 10,000 mein 8,000 will be utilized over here. This liability is going to become 0. and remaining 2000 you can utilize for IGST. So balance payable is how much? हाँ, liability में आ जाएगा. Output IGST 2000. Got it? Output IGST to be payable is how much? IGST में balance है. Clear? Still output balance exists. With this the sum is done. You can just close the accounts. Gross profit you can bring down and net profit you can add to capital. So if you close this accounts now, you are going to get how much? 9,50,000 plus 1,80,000, 11,30,000, 11,30,000 minus 1,10,000 minus 4,18,000 minus 6,62,000 gross profit. Huh? 562. Huh? Ah, 532. 5,32,000. GP brought down. So that is 562. 562. 5,62,000. Add 9,000. Total will become 5,71,000. 5,71,000 minus 35,000 minus 2,10,000 minus 1,50,000 minus 19,000 1,52,000. Net profit is 802,000, 1,90,000 and 2,000 is tax payable 9,94,000. $9,94,000. This is how we need to do. Please note down this one. Now let us continue with the 11th question. Ma. The balance sheet of Mr. Upatal, a merchant on 31st March 2022 stood as below. The capital balance is 2,40,000, trade payables is 1,64,000 and fixed assets are 1,25,600, inventory is 206,400, bank overdraft so and so, trade receivables and so and so. So the opening journal entry is very easy. So you'll record all assets account debit to liabilities to capital account. So whatever the assets given in the balance sheet like fixed assets, inventories, trade receivables, cash, trade payables to bank overdraft to provision for doubtful debts to capital account. That's it. What it is basically given. Okay. Opening journal entry is very easy. Assets account debit to liabilities to capital. Got it? Did not understand? अब देखो illustration number 2. Good question. This is the question. The following is the schedule of balances as on 31st March 2022 extracted from the books, whereas cash in hand, cash in bank, data and stock, furniture and fixtures, office equipment, building, motor cars and regulators. Now let us do this sum. In trading account, P&L account, balance sheet. Now let us start this sum. Building used for business by 5%. Building is how much? Building 6 lakhs. Building is how much? Depreciation is 30,000, which is 5,70,000. समझ में आया? To depreciation is hello 30,000. Next, furniture and fixtures by 10%. Next, furniture and fixtures by 10%. Furniture and fixtures. Yeah, 2,14,000. Furniture and fixtures. How much is the amount? 2,14,000 minus 21,400. 14,000 minus 21,400, which will be 192,600, and this depreciation on building on furniture. 31,400. Now after building and furniture is done, one steel table purchased during the year 14,000 was sold at the same price, but the sale proceeds were wrongly credited to sales account. One steel table purchased during the year for 14,000. Steel table. Do we have anything? Now let us understand this point now. What is the question is, one steel table purchased during the year for 14,000 was sold at the same price, but the sale proceeds were wrongly credited to sales account. So how much is our sales amount? 23 lakhs. So by sales 23 lakhs minus this part of 14,000, which is 22 lakh 86,000. Okay, this is one thing. But what about the other adjustment? If you see clearly, observe, no, steel table consists of what? Furniture. So furniture, before doing depreciation, so we need to understand that what was their furniture? 2 lakh 14,000. Out of this, we have purchased on 14,000 and we have sold it also for what? 14,000. So minus 14,000 table. So 2 lakhs will be in the furniture balance, and that furniture over depreciation at the rate of 10%, which is 20,000. So which is 1,80,000, and this depreciation is going to amount to how much? 20,000. Any doubts in this? समझ में आया? स्टील टेबल वॉज पार्ट ऑफ फर्नीचर एंड फिक्सचर्स. 2,14,000 था फर्नीचर, उसमें से फर्नीचर हम 14,000 का बेच दे रहे, तो बचा कितना? 2 lakhs. 2 lakhs के ऊपर ही डिप्रिसिएशन निकालना है. Here we have purchased it for 14,000 and we have sold it also for 14,000, so hence there is no profit nor loss. Okay, clear? Office equipment by 15%. Office equipment is how much? 1,60,000. Office equipment 1,60,000 minus depreciation at the rate of 15%. 15% means what? 24,000, which is 1,36,000 on office equipment for 36,000. Next is what? After office equipment, purchase of a typewriter during the year 40,000 had been wrongly debited to purchase. There was a typewriter, you have purchased it for 40,000. You have wrongly added to purchases. Purchases value is how much? 14 lakhs. To purchases 14 lakhs minus typewriter 40,000. हाँ, anything or else typewriter बोल के लिख दो. 40,000. 13,60,000. Now you can write it as what? Typewriter 40,000. After typewriter we are having motor car by 20%. This typewriter forms part of office equipment only, so add 40,000 minus depreciation at the rate of 15%, which is 6,000. So this can be 34,000, and here office equipment there is an additional depreciation of how much? 1,000, and this is 24,000. Now why it? 24,000. Any doubts? Got it? ऑफिस इक्विपमेंट होने के बाद क्या है? मोटर कार बाय 20%. मोटर कार $2 lakhs. Depreciation 20%. 40,000. 1,60,000, and this motor car 40,000. Done. Next is what? Value of closing stock was 4,40,000. Closing stock 40,000, and here by closing stock how much it is? 40,000. Next you are having what? Sorry, 4,40,000. 4,40,000. 2 months rent of godown is outstanding, and rent given over here is how much? Rent of godown is 55,000. Rent of godown is 55,000. 2 months is outstanding. So what we need to do? 55,000 divided by 10 into 2, which is 11,000. So rent outstanding is equal to 55,000 divided by 10 into 2. That will be 11,000 as outstanding, and here to rent 55,000 plus 11,000, which will be 66,000 we post. Next, interest on loan on Vishwanath is payable at the rate of 12% per annum. This loan was taken on 1/5/2021. Loan from Vishwanath is how much? 3 lakhs. 3 lakhs. Add what? Interest, which is 12%, which is taken on 1/5/2021 into 12%. So this you can do as 3 lakh into 12%, and was taken on May 21. So May month, June, or July, August, September, October, November, December, January, February, March. So this will be 11/12 into 11 divided by 12, which is 33,000. 3,33,000 for 2 interest on loan. 33,000. After this, what we are having? Provision for bad debts is to be maintained 5% on sundry debtors. Now if you see debtors, 8,60,000. 8,60,000 minus provision for bad debts, which is 5%. 43,000. 860,000 minus 43,000, which will be 8,17,000. And here you can write provision for bad debts as 43,000, but subject to, you can even check, already discount allowed on debtors is 4,000. Okay, fine. This you finish off writing as 43,000. Afterwards we will go one by one. Insurance premium includes 40,000 paid towards proprietor's life insurance policy, and the balance of the insurance charges cover the period from 1/4/2021 to 30th June 2022. This is very important. Now if you see, insurance premium is 55,000. So let us break this. Now insurance premium is given as 55,000. So in which 40,000 is life policy, which is nothing but drawings. Remaining 15,000 is for how many months? 1/4/2021 to 30-6-22. So this will cover to be 15 months. So in P&L account we are accounting for only 12 months. So 15,000 divided by 15 will be what? 1,000 rupees per month. So into 12, which is 12,000, will be charged to P&L account, and remaining 3,000 is prepaid expense. That's it. So now how to record these all things? Capital, add net profit minus drawings, which will be 40,000, and here prepaid insurance. Prepaid insurance is an asset. Somewhere in assets you try to fix it. Prepaid insurance 3,000, and to insurance 12,000. This is how we need to adjust. Now we can go one by one. adjustments. Cash in hand 14,000, cash at bank 26,000. Now let me write all the items. These all are adjustments. Once these adjustments are done, I am closing all the values from trial balance. Cash in hand, cash at bank, which are to be 14,000 and 26,000. Next is sundry debtors. We have already adjusted. Forward stock on 1/4/2021. This is opening stock. Opening stock to be accounted as 6,20,000. Furniture and fixtures done. Office equipment, building, motor car done. Creditors 4,30,000. Creditors 4,30,000. Afterwards, we are having loan from Vishwanath done. Provision for bad debts as 30,000. So you can write this provision as by provision for bad debts 30,000, or else you can deduct from this 43,000. Not an issue. Purchase minus purchase returns done. Sales returns done. Salaries 1,10,000. Salaries 1,10,000. Next, rent for godown done. Interest on loan from Vishwanath 27,000. Oh, already interest is given as 27,000. So that is 33,000 we have taken. 6,000 is outstanding. Interest outstanding should be taken as only 6,000. Why? Because 27,000 is already given. 6,000, which is 3,36,000, and this is to be interest on loan as to interest on loan 27,000 plus 6,000, 33,000. Next. ये हो गया परचेज रिटर्न्स हो गया, सेल्स हो गया, सेल्स रिटर्न्स आर डन, salaries are done, and interest on loan from Vishwanath is done. Rates and taxes 21,000. To rates and taxes 21,000. Discount allowed to debtors 24,000. So this will come over here only. To discount 24,000. Discount received from creditors 16,000. So by discount 16,000. Next, write on purchases 12,000. Write to be 12,000. Next, carriage outwards 20,000. Carriage 20,000. After this carriage, we are having drawings 1,20,000. Drawings already 40 plus 1. This also you need to subtract. Drawings 1 and drawings 2. Next, printing and stationery to be 18,000. To printing and stationery 18,000. Next, electricity charges 22,000. To electricity charges 22,000. Insurance premium done. General office expenses. General office expenses to be 30,000. And we are having bad debts 20,000. 20,000. Next, bank charges 16,000. After that, we are left with motor car expenses 36,000. Afterwards, we still have capital account 16,20,000. With this, we are done with the sum. You just close the accounts. Capital account 16,20,000. What is GP ma'am? यहाँ नहीं लिखा मैं 14,000. हाँ ठीक है. Purchase returns and sales returns are how much? 26,000 and 42,000 minus 42,000 minus 26,000. 1360 में से ये निकाल दिया था 13,34,000. ये कितना होता 22,44,000. Just check your answers. GP value is how much man? 7,18,000. So by GP 7,18,000 and this is 22,44,000 plus 44 4,40,000 is 26, 84,000. GP once you get no, you need to calculate net profit. Net profit how much? 2. Net profit you are getting 1,73,000 and this total 7,34,000. 718 plus 30 plus 16,000 no? तो ये 30,000 यहाँ माइनस कर दिया क्या? हाँ इस हिसाब से यहाँ कितना 718, 748, 754, 764,000. नेट प्रॉफिट 1,73,000. यहाँ से आता कैपिटल बैलेंस कितना है -40 माइनस कितना रहा 16,83,000. दिस इज 1,20,000 राइट्स. हाँ टोटल बैलेंस शीट टोटल 23,80,000. Now this is the sum and finally we do have one more sum. Next one is provisions and reserves. This basic question. So with this we have finished the illustrations. Thank you. Thank you for joining.